All right, and welcome back for another episode of Carnivore Trades. Today is Tuesday, December 13th, 2022. If you've not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, pretty amazing session here today, all things considered. I did not have this one on my bingo card here. We did have a massive gap up and really what you call kind of a gap and crap day. So CPI came in much cooler than expected. I said I kind of figured that would happen yesterday, and I said that we would likely pump up. I said that we probably wouldn't make a higher high though, but that did not quite work out. In the same sense, though, my thesis kind of played out here to an extent here. So essentially, we did make a nominal higher high by about 49 cents there on the SPY. But as you can see, we faded that very sharply. And by the close here, we're at 114 million shares on the SPY today. So good volume, finally getting some good volume in this market. And, you know, by all accounts, it was a gap and crap. So we did still close green, up 74 basis points. But obviously that does not tell the story here. As soon as we gapped up, we had a little bit of a retrace and then a bounce and then really just big sell down through the 405 level and a little bear flag here and then continuing lower into the afternoon session where we just kind of chopped around. We also closed below the 200-day moving average. I wouldn't make too much out of that, but it's definitely not a win for bulls here. So they could easily, we could close back above it tomorrow. This is an options X week, so it's really about the weekly close for me. It's also about what we do tomorrow. If we pump up tomorrow off the FOMC statement, let me just pull up like a 10-minute here. If we pump up off the FOMC statement and then we make a lower high when Powell starts talking, we could sell off very sharply. So if we get continuation to the downside, or conversely, if we take out the highs, I don't really take too much stake into the 200 moving average, although it is an important psychological level right now. More importantly to me, if we look at the futures, and this is why I like looking at both the spiders and the futures, take a look at this daily candle here. That is a massive shooting star with heavy volume. So there's a lot of bulls trapped, and look where you went. This is why I love the technicals. Right up to this upsloping trend line, this previous rising wedge pattern here. We broke below it, never really confirmed, and then we kind of just pushed back up through it and then right back down. So tons of whipsaw here. This is a quad witching OPEX week, so expect a lot of volatility throughout the rest of the week, especially with the Fed at 2 p.m. tomorrow and Powell talking. Again, you guys know how I'm positioned here. So we did get a nice higher high here, but obviously the fade into the close cannot be discounted, and it was done on heavy volume. So if I'm a bull right here, this is not what I wanted to see. What I wanted to see today for a bull, and I'm just going to flip back over to the spiders here, you wanted to see maybe a gap into the 200 moving average, followed by a higher low, and then a continued push throughout the rest of the day. But gapping up 3%, it's like you don't want to see a euphoric move right before the Fed's about to speak, right? Because now that's priced, that's basically the market's pricing in Powell being an absolute mega dove. And if he says anything that's slightly not dovish, it's going to be worse than what the market expects, right? Because the market has just priced in the most amazing Fed statement tomorrow and the most amazing press conference from Powell. So if he says anything related to we're staying the course, we haven't met our goals yet, 6% is 3 times what our goal is, core CPI at 6%, then, that could cause some more selling. And that's what, obviously I'm still expecting is to still a bear market rally. Pointing a few things out here, let's go to some of our sectors, but first, let's look at the triple Qs. So the Qs did make higher highs today, but they did close back below that 100 moving average. And more importantly, that 290 level, right? So this is 1, 2, 3 times now that we've failed to close above 390 or really confirm above 390. We did close above it here and here, but we never really confirmed it. And then the same thing with the spiders, that 403, 402.50 level. We've tried to break out of that many times, and there've just been a lot of sellers coming in. But more importantly, Russell 2000 here is important. So that did close up 80 basis points on the day, but take a look here. 1, 2, 3 lower highs on the Russell. So Russell is a small cap index. It represents risk. And we're seeing lower highs here. Even with today's huge pump, could not make a higher high on the daily time frame. And for what it's worth, these moving averages are minor, but you did lose the 200, 20, and 100 on a closing basis. So again, a little bit of a leading indicator there, perhaps. Let's look at the semis. So SMH did make a higher high, and you went right into this pivot. There's lots of supply up there. But we did consolidate for the better part of a month. So theoretically, this should have juice. But there was still sellers coming in. So that just shows you how powerful this downtrend can be in this bear market. It did get up to the 235 level. I told you guys that would be a level a while ago. I thought it would go a little bit higher, or at least would have some more gas today, because it's outperformed, right? It's had a nice inside bar pattern. You never violated that. We've had nice consolidation, and when you do that, you can tend to make these levels a little bit more minor. So I've been telling you guys, make more 238, 240 would be a better level. But for what it's worth, it did come nicely off the highs. You see NVIDIA close green, close above the 200 moving average. This is kind of getting into that little double top area there, so be careful with NVIDIA. But semiconductors holding up. So again, that's the best friend to the bulls right now. And moving on to IGV, that did close up 1.6%. You did make a slight higher high here, but you also kind of went into double top there, as you did make a technical nominal higher high. But again, this is just not a pattern of strength here on the bigger time frames. So just a big move down. You do have an inside bar here for what it's worth, but it's inside of a bigger down move. So, and the IGV has not really participated much. I mean, take a look at where the lows are in October, right? And then just look at the spiders. You know, this is, you know, more of a, clearly, a V-shaped angle versus a totally flat angle for the most part. But so tech's still holding up a little bit better. That is probably due to the bond market strength here, with the slowdown being priced in. And then over to the Dow transports. Again, what do we got here, guys? 1, 2, 3 lower highs. So this is another indicator I've been talking about here. The transports are showing softness. Pretty good volume there on that sell-off. Let's look at the jets here. So United Airlines did a deal today. And that was a pretty good sell the news move. Look at that huge move. So that's gapped up almost all the way up to the highs here and closed down 7% on the day. That took the jets down with it, closing basically near the lows of last week. Pretty good engulfing reversal there on the jets, so not a good look there. And that did weigh down on the transports. You do have potentially, you could make a case, I guess, that you have kind of a flaggish pattern here, with that move there. But I don't like the lower highs, given the fact that the spiders have been making higher highs. So we pointed that out last week. We lost that Powell pump last Tuesday, and the transports have led to the downside, and they're continuing to show laggard ships. So not a good sign here overall. Onto interest rates. So the 10-year, again, kind of really just been stuck in this range for the most part. It did start the day a lot lower, but it did recover pretty nicely off the lows. If we look on the intraday, as soon as the cash session opened, it's pretty much yields was pushing up here. So maybe a little bit of a head fake. We'll see what this does tomorrow. I mean, it's going to be all about Powell. I still have a sell signal on the 30-year. That is a buy signal on the yield. So buy signal on 30-year yield. But it was down, the TYX here, down 48 cents today. You kind of have like a bearish, slight inside bar there on the daily. But this is more of a weekly and monthly level here. So, I mean, you got a weekly pivot right there, and you're right into that. So it's based on a weekly time frame. That doesn't mean you can't chop around a little bit. It is OPEX week. There's probably going to be some more whipsaw. But I still have that buy signal. So we'll see how that plays out going into tomorrow. The 2-year actually held up pretty well, all things considered. Today we did make higher highs. It did not initially. If you look back on the hourly, this actually took a little bit longer to make the higher high than the ES, so that was a little bit of a red flag this morning, but it did eventually catch up. We'll give it the benefit of the doubt. Again, I still have that inverse head and shoulder target. It's right around in that 103, 160 area, so it's not much higher here. And, we are flagging to possibly get up there, but yeah, 2-year did hold up, so we'll give it the benefit of the doubt. XHB, nice pop. It did go into that 66 handle. So nice bid there, and then it obviously faded off of that. You got above this pivot, and then the red bar above that, that's usually going to be a good sell level. If we look at the ITB, what's the level I told you guys for like a month? So 65. What was the high of the day? 65 on the dot. So nice little fade there for ITB off that gap up. You know, it would have been nice if I had held that nail position a little bit longer here, but just starts becoming a little bit unclear. But either way, nice move there for ITB, getting up into that 65 handle. And it is still outperforming, believe it or not. Home builders, you know, again, the only thing I can think of here is that bonds are getting a bid, and that's really kind of helping real estate right now. But I don't think it's going to last very long. I think the home builders are basically closer to topping out here. Anyways, VNQ, again, still showing laggardship. Looks like we got 83.38. Yeah, so just a slight higher high here on the daily. Did not manage to close above the 100 moving average. Again, I think this inverse head and shoulder target is a very outlier shot at this point, but it did hold up 1.85%. So we'll just leave it at that for now. XLF, here's another problem. You guys know I've been harping on this all last week. And XLF unable to make higher highs. You know, one of the things I said last week was, hey, if you're looking for a Santa rally, you know, what's your price target for Bank of America? Look at Bank of America today, up 2 cents. That's it. This is a weak pattern here. Very weak pattern. KBE, gap and crap, down 1.16% today. Inside bar, bear flag, rejection at the 20 moving average. KRE, regional banks, engulfing reversal today. It's not a pattern of strength here. We still have JP Morgan managing to hold up, although it did close down 13 cents. So red in an up market. Goldman Sachs managed to close green. It's, you know, another 20 moving average rejection. Morgan Stanley did make a higher high. So that one was kind of an outperformer there. Holding up a little bit better here, but, you know, Wells Fargo, Citigroup, not looking very good. Citigroup red as well today. So XLF continuing to show some problems here. And we're not seeing, you know, this wasn't really a broad-based like power rally. I mean, we faded pretty hard off the highs. Take a look at what Tesla did today, down 4%. This thing can't get out of its own way here. Huge selling, and on heavy volume. It looks to me like Elon's selling again, or some insider is selling, because this has no business being down this much. And I know that, you know, it's long overdue for this to be selling. We're closing below that weekly 200 currently, just for what that's worth. They'll have to save that by the end of the week. You do have support at 150, but I mean, there's your 50-month moving average. But it's not like, you know, if you just looked at the performance day up 76 basis points and you didn't look at what happened intraday, it's like, oh, it was a decent day for the market. But then you look at, you know, Tesla. I mean, Apple did not look very good intraday. That's bear flagging here on the hourly. So there's, I mean, under the hood is, you know, transports lower highs. Russell, XLF. Take a look at broker dealers today. Closed at big tail candle there on the daily. So, you know, I just don't think it was that much of a win here for bulls, especially going into Powell tomorrow. Anyways, before I start talking too much here, crude up 3% on the day. So that is a little bit of a divergence here. So, you know, CPI coming in cold, crude up 3%, and, you know, 10-year red. So again, continuing to be more distortions. Maybe it's OPEX related stuff. This does expire Friday as well, so maybe this chops around in a range. You'll see some kind of divergences and things like that when you have a quad witching OPEX week. But crude was up 3% here. I don't have any buy or sell signal on it at the moment. XLE managed to hold up as well. Again, a little bit of a divergence, right? 10-year down. XLE should be down, but it wasn't. And basically went up there and tested that 50 moving average before backing off. Little doji candle there on the daily. XOP, more of the same. OIH. On the stronger side, this has been holding up well, up 4.19%, gapped above the 50, and one of the few sectors that actually held the gains, not only held the gains today, but was able to continue pushing higher, and actually closed, you know, basically near the highs of the day. Yeah, right at the highs of the day there on the OIH. So that is a sector that held up okay. Nat gas here, you know, what can you say about this? So, you know, gap and crap yesterday, and then an engulfing reversal today. This is all over the map. I wouldn't do anything with it at the current time. It is just too volatile on a daily basis. Dollar index continuing to test that 104 handle. I do have this potentially going a little bit lower, but I think the dollar will be a pretty good buy here pretty soon. We'll see how it holds up tomorrow. We'll see what it does into Powell. Again, OPEX is Friday, so expect more whipsaw. Gold with a higher high there as well. Not a terrible pattern. I still think it needs to do more backing and filling, but again, it's holding up decently. And silver just continues to be a powerhouse here. I think this is overbought. Do not chase this up here. I do like silver, but I like it when it corrects here. So you're coming into a lot of weekly resistance. And And historically, precious metals get hit really hard into OPEX week. And a lot of the time when you're up the first 2 days of an OPEX week, they whip it right back down on the Wednesday. And then Thursday, Friday, they continue to sell. And vice versa. If you're down big the first 2 days, sometimes you get that reversal and whipsaw. So just be aware of that. Platinum here also kind of just stuck in this wedge pattern. Wouldn't do anything with that at the moment. But nice bid there on the day. And then copper also getting a nice bid, but coming off the highs. We won't make too much out of that. Bitcoin here. Bitcoin actually, so other than the OIH, this actually held its gains okay. Hold on. Okay, there we go. Sorry. So that bull flag that took, like 2 weeks is finally starting to play out. Where did we go up to? 18,200. So just through that 50 moving average. And now we're backing off a little bit. But, for what it's worth, it actually held most of the gains here, at least comparatively to the spiders, up 3% on the day. Couldn't close above that 50 moving average though. And again, just showing you the signs of weakness here. It's had a long time to consolidate and it still was not able to really hold that 50 MA. So again, you still have that dominant weekly bear pattern here, but a nice little move there off that kind of continuation pattern. So we'll give it the benefit of the doubt for now, but it's really, as you guys all know, it's all about Powell tomorrow. What does he say? In my opinion, I think the market just showed you that it made up its mind right now. Like I said, if you were a bull, you probably wanted, a smaller gap up, then maybe a higher low, and then kind of like a gamma squeeze or something like that with a close at the highs. You don't want a gap and then a sell-off, regardless of the fact that we bounced a couple of dollars before the close. It's just not good price action. And we saw, the jets closing red, transports giving back all those gains. A lot of banks closing red. Not a good sign here moving forward. So we'll see what Powell says tomorrow. And again, watch for, can we make a higher high? That's really all it comes down to me. And if not, then I think this market is runnable. But anyways, guys, going to wrap it up here. Come find me on carnivoretrades.com. I'll talk to you all tomorrow.